Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and every week, except for last week, I did not go live last week. It was the holiday. But every week, I bring you all of the up-to-date information that is going on in the mortgage and real estate world. And today, we're going to be talking about a brand new product that we just rolled out for home equity lines of credit. Now, we've talked about home equity lines of credit before. Home equity lines are especially in need right now for people because we're all finding that we've got a pretty good amount of credit card debt from the glorious inflation that we have all been dealing with. So what is the very best way to get that credit card debt paid off? Other debts that you might have that are also at high interest rates? Well, an equity line or a home equity loan. Now, this new product is amazing. I'm going to go through all of those details with you here in just a bit, but I do want to remind everybody that this is interactive. So please, if you have questions, feel free to put those questions into the feed. I'd be more than happy to answer them. I'm going to read them out loud for everybody that is watching and answer them for you. And this is going to be one that you guys are going to want to get in interactive because maybe you're thinking about your own personal scenario and you're wondering if this is a solution for you. So let's jump right into it and let's just start talking about this new line of credit because it is great. We have actually had 2 applications. We just rolled this out about a week and a half ago, and we've already had 2 clients that were willing to test run it for us, make sure that it was something that did work. They were already looking for that home equity line opportunity. And so we went ahead and we ran their files through this system, and it was spectacular. So it literally can fund within a minimum of 5 business days. It is obviously up to you and how quickly that you get things returned, but that is a very, very fast turnaround for a home equity line of credit. So funding money in your pocket in as little as 5 business days, I would say, honestly, probably expect about 7. This loan that the most recent loan that we just funded was a $400,000 line of credit. It was very, very simple for the client. They did not upload any bank statements. They did not upload any documentation as far as income, no W-2s, no pay stubs. The appraisal was all automated through the computer system, so no appraiser had to go out to the property. So again, just a very, very simple way to get this equity line in place. And on top of that, it's actually got some really fabulous terms as well. I can see that the Barclay Group jumps on and says, "Hi, everyone. I love this loan." And yes, it really is a great loan. So if you have been thinking about getting either a home equity line or a home equity loan, this is a fabulous option. Now, why do I like this one? Number one, the first thing is that the amount of money that you draw up front day one is fixed. The interest rate is fixed for 30 years. So the monthly payment, then you don't have to worry about it being an adjustable rate. But you can pay it back just like a normal equity line of credit, very standard terms. You can pay it back and have open availability to this loan, these funds again in the future. So let's say that you take the money, you pay it back, and then you want to be able to access that money again, you absolutely can. Now, when you do go to re-access this money, it would no longer be on that fixed rate term. It's going to be like a normal home equity line of credit where the interest rate will fluctuate and go up and down with the market. But you do get that initial amount of money that you do draw up front day one, locked in and fixed, which makes it very, very similar to a home equity loan. And I love that part. I can see that Amanda jumps on. She says HELOCs are great for taking advantage of the huge equity most people have in their properties to invest in another property or add additional units, ADU to their property, generational wealth. So Amanda, that's actually fabulous. A home equity line of credit is not just for debt or debt consolidation. It can be utilized for home improvement as well. It can be utilized to take money out of your home and go buy another property. So there's many things that a home equity line can be useful for. And I absolutely agree with you. The more real estate that you can get under your belt, whether you are, going to build an ADU to put maybe a renter in there and get some additional rental income in on your home, or you're going to take it and go buy another property to get an investment under your belt. Or maybe you're going to take money out of your property, go buy a new primary residence and rent out the home that you're in. Or again, if you just need to get that debt paid off. And yes, Armando, I'm so sorry I called you Amanda. So you have to realize the old eyes are trying to look at a screen and talk to the camera at the same time. So I apologize, Armando. So sorry. But yes, this is really a great one. So let's talk about how it works. You give me a call and we're going to talk about how easy this is. So you give me a call, we talk on the phone. I log in, I enter your details, your basic details, your name, your address, your social security number, your birth date. It is a soft credit pull until they are ready to fund the loan. So that's what's even better about this is that you can see what options are available to you without even having to go through that hard credit check. So we're going to go ahead and we're going to do that. And based on those simple pieces, it's going to tell us what you are pre-approved for. If you like the amount that they're offering and you like the interest rate that is being offered, then we are going to go ahead and go to the next step, and they are going to send you an email. So the system, and when I say they, I mean the computer system. It's all AI at this point, right, guys? But the computer is going to send you an email and ask you to log in and create credentials and start to, input your information. So basic loan application information. Where do you work? How much do you make? What is your annual income? And now realize, I do want to give you guys this heads up. This application does ask for annual. So make sure that you put in what you make yearly. Don't put it in as a monthly figure. But it will ask you how much money that you are making and just kind of go through those basic details. Now, also what's really nice about this loan is that it is a one-person loan. So even if you are married and you both own the property together, or you have a partner that you own the property with, not everybody has to be on the loan in order to account for income. So that is also super cool. You are going to have one person that is going to apply. So I always suggest the person with the highest credit score to get the very best monthly payment that you can, very best interest rate available. And then it's going to ask you about additional household income. So you're going to plug in that person's additional household income that they are bringing to the table for you on a monthly basis. Then what it is going to do, it's going to ask you to connect your bank statement. So your personal bank account, it's going to ask you to connect it. From there, it's going to pull the details from your banking. So it's going to see the deposits that are going into your account on a monthly basis. Now, if you have numerous accounts and your money, you like to separate your direct deposits and your money gets deposited into a different account based on, what it is that's coming through, you can actually connect multiple accounts, multiple bank accounts to this system, to this platform. So it's going to account for all deposits that are going in two personal accounts on a monthly basis. And as long as what it accounts for, the deposits that it sees are going in, is enough to qualify you for this loan, then again, there's no pay stubs, no W-2s, no tax returns. None of that documentation is going to need to be uploaded. So very, very cool. I love that. It is just so simple. It's going to run an automated value on your property. So what is your home worth? And it's AI. It has access to everything that it needs to pull a balance or an average of what your home is worth. So as long as your property, your value comes in high enough to do the loan, the deposits that they're seeing in your bank statements is enough to do the loan, then you're basically done at that point. You're going to sign some disclosures. You're going to roll through a couple of more items that they're going to ask you to do. Upload a driver's license, upload your deed, your grant deed. So that is something that me as your loan officer is going to help you pull. We can get that for you. We're going to get that uploaded to their system. And then they're going to create your final disclosures and set up a notary to meet with you at your home to do a signing. And they're going to fund the loan. So it's a very, very simple program, very simple qualifying, very simple, easy application, something that we've all been waiting for, hoping for, and we need. It is actually just that simple and that easy. So it is pretty cool. I do love it. The higher that your credit score is, the easier that it is to get this loan done. They will go down to some lower credit scores, so that is available, but they're not going to give you as much in a line of credit. So if the lower that your credit score is, the less money that they are going to give you that's going to be available to you, but they are going to look at the overall credit package. They will do a home equity line up to $400,000. So the line of credit that I told you, we've had a couple of close already. We just rolled this out about a week and a half ago. The most recent line that we closed was for $400,000. It took my client 7 days start to finish for the money to be in their account. Again, no uploading of any income documentation connected, just all of those bank accounts, fixed interest rate on that $400,000. So, it's really a fabulous option that is available. And, if you need, like we talked about with Armando, if you want to build that ADU, you want to go buy another property, you want to pay off some debt, this is a fantastic way to do it for sure. So if anybody has any questions, I'd be more than happy to answer them for you. I can see that Why Not jumped on and says, happy Wednesday all. So happy Wednesday to you, Why Not? I could see my dad says, hello, Lake Havasu. So hello, Dad. Thanks so much for joining. But with that, I'm going to take a quick break. And when I get back, it's 60 seconds, guys. When I get back, I'm going to start getting into all of the details. What loan to value can you go to? What credit scores are going to be allowed at what loan to value? To get this broken down just a little bit more in detail for you, just in case this is something that you're interested in. But remember, if this is something that you want to do, you need to have a call with us. You need to have a phone call with us. It's going to take us literally maybe 7 to 10 minutes to tell you what you're pre-qualified for. Soft credit check to make sure that you are going to be pre-qualified. You're going to log in and you're going to do all of the connecting of your bank accounts. Once they have approved the loan, they are going to do the hard credit check before funding. So there is absolutely no loss to you. If you've been hoping to get a line of credit, maybe somebody told you no before, this is an opportunity to try again without anything being on your credit, no derogatory, no, application or credit check on your credit report, and then no loan that shows up afterwards which can drive that credit score down. So there is absolutely nothing to lose by us trying to give this a whirl. So once again, what do? You call me. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So a quick 60 seconds and we're going to get super detailed. So we'll be right back.
She's the mortgage mom.
This is Debbie Marcoux, the mortgage mom. Well, I've had a lot of questions lately. What can I do to bring my monthly payment down until interest rates get better? Well, if you are a buyer and you're out looking at homes, What you want to focus on is a program called a 2-1 buy down. If the market rate today is 7%, you would start your first year at 5%, year 2 at 6%, and year 3 through 30 would be at that 7%. It's a great way to enter the market today, knowing that rate cuts are just around the corner. Give us a call or head on over to our website at mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926.
When you're in need and don't know where to go, pick up the phone and call mom.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we are talking about that easy home equity line of credit. Get it funded in as little as 5 days. On average, it's been 7 days so far with the 2 that we've put through, and this we've only had it for about a week and a half that we've rolled this out. So super excited about it. It was the easiest process that we've ever been through for a loan to get it funded and get it closed for you on these most recent 2 equity lines that we've done. So let's get into the real details on this, because it is important for you guys to understand as much as we can about this line of credit. And then obviously you can always call us for more details, but you have to call us to find out what you would be pre-approved for. Again, soft credit check. Then you will log in and you will connect your bank to make sure that your income qualifies. And then from there, it's just going to be easy, like all the way through to closing. So here we go. It is a standalone home equity line of credit. It is good for up to third lien position is the way they say it. So I'm sorry, I got kind of caught up there for a second. So they will actually do it as a first mortgage if you don't have a loan against your property right now. They will do it as a second lien. So if you have a mortgage and now you want to open the equity line of credit, which is pretty typical and standard, but they will also do a third lien. So if you happen to have a mortgage and let's say a home equity loan, and then you wanted to get some additional cash, you can also do this as a third lien position. So that was actually one of the better opportunities there with this line of credit that I saw and that I liked. We've got, it's 100% online is the application. So the only thing that you're going to do in person will be the final loan documents that you will sign with a notary at your home. Again, very simple. They come out to you, sit at your kitchen table with you and sign the documents. There are no out-of-pocket expenses at all, no costs to you. Now, there are costs to do a home equity line. There are costs to do a home equity loan. There are costs to do a plain refinance of a property. However, you do not have to pay for anything out of pocket. Most mortgages are going to require that you give them your credit card so that they can at least order an appraisal. Again, like I told you, it's all automated value. So the only fees that you are going to pay are going to come out of the proceeds of the loan, nothing out of pocket whatsoever. And let me just tell you that the fees for this line are actually very low. They're very insignificant when compared to some of the other equity lines and equity loans that we actually have available to sell you. Now, sometimes this is not going to be the way to go. Sometimes we're not going to see deposits into your bank account. So for example, if you are self-employed and you have an S Corp or an LLC or a C Corp where all of your income is flowing through your business bank account, and then you, because you're a smart cookie, decide not to pay yourself a whole bunch of income on a monthly basis, well, then this would not be a product for you, because they're only going to look at what is being deposited into personal bank accounts. So in that scenario that we just talked about, that self-employed borrower, then we're going to go ahead and go with the traditional qualification of getting your business tax returns and bank statements and such, and do just a normal equity line or equity loan. Now, if you are self-employed and all of your money, you are a Schedule C, a sole proprietor, all of your money is going into a personal bank account when you deposit it. This could be the loan for you, to be honest with you, because all we are looking at are deposits going into a bank account. We are not looking at tax returns. So this could be an opportunity for that self-employed borrower that they didn't know was available. Let's see. Again, it's the soft inquiry. So you're going to know what you pre-qualify for in seconds, which is super cool. And then let's talk about what we can do here. So on a first or second lien position, for a primary residence, I told you that the maximum size loan amount is $400,000. You can do that for a loan to value of up to 75%. So let's talk about what loan to value means. Loan to value is how much you owe on the home versus how much your home is worth. So let's say that you had a $400,000 mortgage and your house was worth $1 million. That means that your loan to value would be 40%. So in that scenario, you can go up to 75% loan to value, which means that you'd be able to take up to $750,000 in combined loans, but you owe $400,000. So you would be capped out at a new equity line of credit of $350,000. So if you didn't follow that math, please feel free to call me. We'll talk about you personally, your scenario, and I would be happy to run your numbers for you and tell you what your maximum will be. Now, 300,000, let's say that you wanted 300,000. We could go up to a maximum of 80% loan to value. 250,000, 80% loan to value. Now, we can also do 250,000 up to 85% loan to value, but your credit score would need to be 740 and above. So when they do that soft inquiry, your credit score would need to come in and at least 740 to be able to do 250,000 up to 85% loan to value. So they will do this on a second home. They will also do this on an investment property. Again, remember that depending on your loan type, the amount of line of credit that will be available to you will be different. So not everybody is going to have an opportunity for a $400,000 line of credit. It is based on your credit score and it is based on the occupancy of the property. So those things are going to change, but just to give you guys kind of a little bit of an idea. Now, we talked about that third lien position, so this is another good one for you guys to hear. Let's say that you do already have a mortgage and you already have a home equity loan or home equity line. So let's say that we're trying to do a third lien position. The maximum loan amount that you can do in third place, in third lien position, would be $100,000. But still, $100,000 is quite significant when you think about the fact that they're going into third lien position. So they are in the most riskiest of places for an investor to be able to get paid back should you run into difficulties and the property was to foreclose. They would be the last people to get paid. So they're offering to go up to $100,000 in third lien position, which is pretty phenomenal. They will also go up to a $150,000 third lien, up to 70% loan to value. So again, that is total loan to value. Everything that you owe on every loan that you owe it on against that property cannot exceed 70% of the value of the home, including the $150,000. But you have to have at least a 760 or higher credit score. So again, 100,000, you can have a 680 or better. 150,000, you need to have that 760. So that's why I said at the beginning when I started this show, the higher your credit score, the better, because the more money that you are going to have available to you. Now, primary residence, it is your owner-occupied home. And let's say that you've got that little bit lower credit score. So if you have a 640 credit score to a 660, so 640 to 660, you're somewhere in that gap, you would be able to still take an equity line of credit with them for up to $125,000 with up to 75% in that loan to value. So one more time, let's kind of run that loan to value to make sure that everybody understands how that works. You're capped at 125,000 or 75%, whichever's less, right? So let's kind of talk about that again. So let's say that your home is worth $1 million and you owe $500,000 on your first mortgage. You can go up to 75%, which would be a maximum financing for everything included of $750,000. Well, you owe $500,000, which means $250,000 would be remaining up to the $75,000, but they're going to do whichever is less, $125,000 or 75%. So in that scenario, if you owe $500,000, you would be able to get $125,000 in a home equity line of credit with a 640 credit score. So I love this program. I think it's fabulous. I think it is going to help a lot of people to, again, get debt paid off, possibly build that ADU, do those home improvements that you've been needing to get done, that roof repaired, or things that, you've maybe been lacking on and haven't gotten completed or fixed. It's going to allow that person that wants to pull out money from the home to go buy another property. They will be able to do that. So they could go buy another investment, or they could, go and buy a new primary residence and then rent the home that they live in. They could rent that house out, keep that as their investment property, but it is absolutely a fabulous loan. It is one I think of the best and definitely the easiest in the industry to get done. We've had it open now. We've opened it up, like I said, for about a week and a half. And when they say that they move fast, they are not kidding. Both of those loans, and one of them was started on the Friday before 4th of July. So if you think back this year, 4th of July was on Thursday. So this person started it on Friday. Saturday and Sunday doesn't count. They're not business days. So there was Monday, Tuesday, Wednesday. Thursday was a holiday. Friday was a holiday. Saturday, Sunday were weekends, right? And we're here and we're Wednesday, and it has already funded and closed. And both of those loans, one we started on Friday before the 4th, the other one we started on Monday before the 4th. And both of those loans have already funded, and both of those clients already have that money in their account to do what they need to do with it. So if you have been thinking about getting a home equity line or a home equity loan, I urge you to reach out to us. I urge you to call us. Again, it's like 7 to 10 minutes on the phone. We plug in your information very quick. It is a soft credit check. We give you that pre-approved amount. If you like what you hear, you're going to get an email from our computer system that is going to ask you to log in. You are going to enter your application details. What's your name? What's your birthday? What's your social? Where do you work? How much do you make? You're going to remember to enter annually, but we'll remind you of that with your phone call. And you're going to connect those bank accounts. They're going to run an automated check on the value of your home. And then it's pretty much smooth sailing from there until you close the loan. So give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Maybe you don't need this product, but you know somebody that does. Please share this YouTube with your friends, you guys. If you liked it and you know that this would be valuable to somebody, within your community that has been talking about needing it, whether it's family, it's friends, parents, somebody that you know that might need this opportunity, please share this video with them. Give them our telephone number. Have them give us a call and let's see what they can do for us. Armando does say, what are the rates for these HELOCs? So they do home equity lines and home equity loans are all based on your credit score. Ultimately is what you're going to get as far as an interest rate goes. But on these most recent ones that we just closed, the clients were both between 9.375 and I believe the other one was 9.5. And that was the fixed rate term. So remember that this is giving you a fixed rate on that initial draw. So very, very standard interest rates for what we're seeing seeing in today's market for these home equity loans and home equity lines. Many of the home equity loans and lines that I've been running across here within the last 30 to 60 days have actually been in the 10 to 12% range. So being sub 10, and as easy as this is to get it done, this is a phenomenal product. It truly is. I love it. Again, it's a fixed rate for that initial draw. After you pay back that initial draw, you have access to those funds that you can draw again. And then that would be just a standard home equity line of credit that is based on the prime rate and margins. And that will move up and down with the Federal Reserve prime rate. So, anyway, Armando says, nice, thanks. And you're very, very welcome. Again, you guys, give us a call if you'd like to see if this works for you, or like the video and share it with your friends. Share it. Tell them that this is an opportunity for them, especially if you know that they're self-employed. Many, many self-employed clients are working under DBAs, Schedule Cs, so they're sole proprietors on their personal tax returns. They're not incorporated. They're not LLCs. They're not C Corps. So this could be a very, very good program for somebody like that as well, who has maybe had a very difficult time getting approved the traditional channel by having to show, 2 years of tax returns. So again, it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. I will talk to you guys next week right here, Mortgage Mom Radio on YouTube.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.